So welcome everybody. The Legal Sustainability Network welcomes you to this webinar on GHG reporting. We're pretty lucky to have Jay Ruckelshaus, who works at Gravity. He's their climate strategy. What's your title, Jay? Is it Director of Climate Strategy? It just says Climate Strategy.
Yeah, I'm a co-founder here, so I've been on board since the beginning and manage our policy partnerships and climate strategy functions.
Okay, awesome. Well, Gravity is one of the companies that does the work in this space that everybody needs to be done in order to accurately track energy and climate data, right? Which is pretty relevant now with disclosure requirements. And this week in particular, an injunction has been granted against SB 261 in California. So the future of that, I have some thoughts on how that's going to play out on the legal side, but so that it's a very rapidly evolving landscape. I guess I'll just leave it there. And Gravity's doing great work to try to make this stuff easy for people because it's not easy. I do a lot of GHG accounting and strategy work in my practice, and one thing people struggle with is data integrity and accounting and sort of what the requirements are and how to meet them and how to be transparent about it so that you're, number one, meeting regulatory requirements, number two, don't get sued if you're doing it for voluntary purposes and have accurate traceable data. So Jay also shares some family history with our law firm. So I work at Beveridge and Diamond, and one of the founders of our firm was the first administrator of the EPA, Bill Ruckelshaus, and he was a founder of the firm, and Jay is a relative. So we're honored to carry that tradition of environmental work forward and welcome Jay here today. I think everybody knows what LSN is, but we're a network of legal organizations, primarily law firms, but we welcome in-house departments as well, focused on improving sustainability in the legal space and at law firms in general. So without further ado, Jay, please feel free to correct anything I got wrong in my brief intro here and take it away.
Thanks so much, Brooke, and thanks for the invitation to this group. I'm really excited to have the session, and yeah, kind of a serendipitous connection to make a couple minutes ago. Brooke, I appreciate your pointing that out, and excited to talk a bit about what Gravity does, but more broadly, like how we view this space and how we view the broader solutions market for helping companies get a handle on things like greenhouse gas emissions inventories and related topics, supply chain engagement, ESG measurement, for, as this group is well aware, the kind of rapidly evolving efflorescence of sustainability disclosure regulations. But also crucially, like the relationship between all of that and what does this amount to for the company's bottom lines and value creation and actual decarbonization. And would love to keep it collaborative. I mean, especially with a cozy setting. I think we had carved out time at the end for Q&A, but please just feel free to flag me down. I'll try to be monitoring the chat. Would love to keep this conversational rather than just kind of a monologue directed at you. I don't think anything else to call out right off the bat before I start to share my screen. But yeah, hit the nail on the head in terms of background. I'm a co-founder at Gravity and been around since our founding, obviously. And so excited to talk about that and spend a little bit of time in the product to make it real and show rather than tell. So with that, I'll go ahead and share my screen and pull up some slides to help structure the discussion. Confirming, can everyone now see my slides? Great. So as mentioned, ambition for the agenda is to describe a little bit kind of overview, where does Gravity sit in the marketplace? What do we do? Jump into the product and show a bit of like, how do we make this real for companies? And then spend a decent chunk of time, hopefully talking about how we connect the dots and just the hunger to connect to this more regulated compliance checkbox reporting function with the value creation departments at companies and like what that looks like very tangibly beyond just the buzzwords that I just used in that previous phrase. And again, Q&A please throughout. So at the highest level, so Gravity is both a carbon and energy management platform is how we're stylized because we help with companies on all things measurement and disclosure of greenhouse gas emissions, sustainability metrics, ESG measurement, but we also help them actually identify and implement emissions reduction projects. with a focus on those, the many of them that save them money in their direct operations and in those of their suppliers. So there's kind of two broad buckets to our work. One on the left there that you'll see kind of often packaged as carbon management. So that's everything scope 1 to 3, greenhouse gas emissions measurement, supply chain engagement, thinking about the actual reporting frameworks themselves. We'll talk all about that. But then, arguably more excitingly, what does this amount to in terms of the potential for companies to articulate, contemplate setting, and actually achieve different targets like energy intensity reductions, emissions reductions, all that sort of thing? And these two pillars really mirror the reasons we wanted to get in this space to begin with, candidly. I mean, we took a pretty long, hard look. Like, we're very transparent. We're not the only or the first even technology company to try to help corporates and private equity firms and organizations try to get a handle on these similar topics. But we were very frustrated with the kind of first generation of platforms in this space and hearing a lot of frustration from companies around really two main pillars that track these pillars. So one was just all things data collection, data ingestion, data messiness, still really bedeviling teams everywhere. That there was a lot of marketing inflation in terms like automation, kind of thrown around everywhere, maybe losing their meaning a little bit. But at the end of the day, companies were still having to manipulate data into spreadsheet templates or read utility bills or fuel receipts until their eyes glaze over and they question the day's work. And then there was just a lot of ground to be made up in terms of real modern data management and data ingestion tooling. And as a bit of a backstory, Gravity started initially in the industrial world very intentionally. So we wanted to go where the data problems are hardest, where the data is messiness, which would kind of force us to build tools that actually made their lives easier, especially in the physical industries like manufacturing, construction, logistics, metals and mining, utilities. Folks often who, let's say, don't have the most climate forward motivations themselves necessarily all the time. And we kind of liked that as a disciplining effect and disciplining chance to make us actually build tools that make their life easier. Otherwise, they'd laugh us out of the room. We've expanded from there, as you'll see in a little bit. So all things data ingestion, data collection is really where we wanted to start. But the other exciting motivation and conviction we had around entering this space is that there was still so much room to connect this measurement and reporting and compliance motion, which has really accelerated, as Brooke mentioned recently, with what does this amount to in terms of actionability and how do we actually make this stuff useful for the business in a way beyond not getting sued. And so we really had a lot of conviction around connecting the measurement reporting world and realizing the potential of the fact that we're fortunate to live in a time in which so many emissions reduction interventions and projects just pencil out and make a ton of sense for the business motivations of these companies and shareholder, not stakeholder value. And about 25%, in fact, of global emissions can be abated today with ROI positive projects and that are still really massively under adopted. So we go very, very deep in the life cycle of project implementation. We have a whole energy management marketplace that we'll talk about, have energy engineering in-house on staff, and we harness all of that reporting and measurement data for the compliance exercise to pre-qualify projects, match you with vendors and financing and get these things done. And for us, more philosophically, that was always important to kind of, if we're gonna expand climate action in the corporate world beyond the kind of like deep-pocketed first movers or high margin software companies who do great work and get this done in other industries and get folks off the sideline. Like, it does have to have an ROI angle and it has to align with the business imperatives. And therein lies a bit of our let's say insulation to the political vicissitudes of the day. It's important for us not to predicate a business model on any particular regulatory pathway, going a certain direction or another direction and or not. You're stuck in your comment there, Brooke.
Yeah. So you may get to this later.
I
And you
will.
mentioned
Yep.
data. Yeah. Okay. So just leave it then. Yep. Great.
Super helpful. Yeah, I'll cover primary data and estimates. Um, so very quickly on our background, I'm not going to belabor this too much, but kind of a heterogeneous team here that brings veteran software and product building and sort of company scaling chops. Our CEO, Sala, led product at Samsara, but a $25 billion publicly traded IoT company. Ted Cornish, serial entrepreneur across data management companies, a little bit of a black sheep coming from the academic background than myself, but also, as Brooke mentioned, a family of environmental lawyers. So I think the intersection of those two pillars I mentioned a moment ago, better data collection, better actionability, is really why Gravity is growing so fast now. We see our approach resonating and getting the highest marks across every independent analyst report from the past couple of quarters. I think the stat that's most indicative, though, of our traction and growth in this space is that it's actually greater than 60% now, but greater than 60% of our hundreds of enterprise customers have come to us from direct competitors. I won't name probably proper nouns on the call, but there are many buzzy platforms in the space that maybe leaned a bit heavier into marketing than the software itself. And we've been a direct beneficiary from companies like Peloton and Waste Management and Major League Baseball and a lot of the big names we work with now having switched directly from competitors, and we've never lost a customer, knock on wood. The maybe actually the most exciting stat on the page, though, is like our results manifesting not only in terms of revenue growth and company scaling, all those core business metrics, but actually dollars saved and hundreds of thousands of tons of emissions abated permanently in the operations of our customers. So we're really proud to have saved, I think the number now is about 20 million in annual energy costs for our companies, but it was 15 million in August. So you can kind of see what the curve is doing. Just a couple more company overview slides here before jumping into the product. We've expanded pretty far beyond those initial industrial roots and kind of had the vindication of the initial bet that by focusing there first, we would build a lot of the stuff that, say, software companies like Adyen or REITs or professional services companies like some top 10 law firms that I can't name publicly yet have been challenged with. And so we're pretty industry agnostic at this point, a pretty big private equity and financial services practice with folks like Cerberus, New Mountain Capital, Antin, Berkshire Partners, and others, and their portfolio companies, of course, as well. Cool. That was actually all the company overview slides. I might come back to the deck toward the end of the call to talk about a couple sort of case studies and how we stitch things together. But before that, before I jump into the product, any other kind of like high level questions on the market or the company, anything like that?
Not now, but maybe later.
Cool. Let me jump into things then. Hopefully you can now see another tab here, which is the Gravity platform. Getting some nods. Awesome. Okay, so this is always a bit of a risky proposition that we could spend, several hours kind of poking around the platform, talking about the different use cases, and nobody has time for that on the day after, CARB's workshop. And so I'll try to keep this a bit more targeted to a couple themes that end up cropping up again and again from companies who've never measured before and are just getting started to, deeply sophisticated Fortune 100 companies engaging thousands of suppliers on the platform. And those themes are data collection, data ingestion, to your question as well, Brooke. Auditing and reporting, which of course is a real game changer in rigor in this space. And then actionability. How do you get real value from this data and these numbers? Just a couple of things to call out right off the bat in terms of architecture here. A lot of our companies, like I'm sure a lot of your clients, are pretty far flung operationally, and so make it really easy to represent whatever hierarchy and sort of business unit or geographic breakdown makes sense for them. This in turn powers different features like permissioning and reporting and target setting on those rungs of the ladder. You'll kind of see crop up throughout the platform. And then a similar kind of temporal equivalent of that we call reporting period, wherein many of our companies are measuring and reporting on maybe annual emissions, maybe quarterly, maybe monthly, or even real-time energy consumption targets. And so that in turn powers different features like data completeness, project management, QA, QC, based on the denominator of that particular reporting period. So you'll kind of see those meta features wended throughout the platform as we now transition to the measure page. And again, this is a little painful because there's a whole bunch of stuff that you'll see that we won't be clicking on today. Maybe leave more breadcrumbs for the future if there's interest, but focusing on for a moment on data collection. So as I mentioned in the slides, this just really is where the rubber hits the road for companies. Like at the end of the day, greenhouse gas emissions calculations aren't that complicated. Like it's really just kind of basic algebra. All the complexity, I'm being a little, a little flippant, but a lot of the complexity is where does this data live in these companies? It's often unstructured utility bills or fuel receipts or invoices or spreadsheets of infinite variety of schema. And so we make it really easy to ingest as many kinds of that unstructured data as we possibly can for companies, if they have it, and if they don't, to estimate smartly from there. And so I'll talk about maybe just like 2 or 3 ways of getting data into the platform, but there's a lot more we could go into. One thing to note off the bat too is we really try to represent or to kind of lay out the platform in more layperson friendly terminology and visuals here. You'll see your sites and your fleets rather than hitting them over the head in the first instance with GHG protocol, sort of arcane vocabulary of fugitive emissions and process emissions. Our customers really are at the full spectrum of knowledge on these topics. So I'll jump into one of these sites kind of as an example to talk about data collection and hooking up to the systems companies have. As you can imagine, a site is an office building or a plant or a construction site or a mine or anything with a physical footprint where we'll track the different emission sources relevant to that site. And our preference is really to meet the data as upstream as we possibly can. So wherever we can hook into data streams directly into utility information, for instance, we can integrate directly to utility providers. Companies, all they have to do is just add their login credentials here. We don't touch them. They pass straight to the utility. And then in return, we'll get whatever meters are associated with that utility account across wastewater, natural gas, electricity, district steam, any of that information, which they can then just map directly to those sites, which is a great option because then it's kind of set and forget. The data will come in on a regular basis, whatever cadence you get those bills. So typically, monthly, and it's great primary data that they don't have to like go fish for all the time. And integrations work great. They're really popular. But we also found pretty early on that a lot of companies, they're not a great fit for. Maybe they're renting a space. Maybe the landlord has the bills. Maybe they still just have a million, fuel receipts or invoices lying around. And so integrations alone they just don't cut it. And so we've built a bunch of other ways of getting data into the platform. And yeah, maybe I'll show just one other one. So if I pull in here an example of a utility bill, hopefully you'll see my other tab. This is a Duke Energy electricity bill. I'm sure this group has seen some of these before. The challenge with this sort of information is there's no one format for it. They're all structured differently. They all have different, layouts, and sometimes the information itself is structured differently. But at the same time, there's such rich sources of information, not only for carbon accounting and you're satisfying your disclosure obligations, but also for sizing up decarb and energy saving opportunities, which we'll get to. So Gravity built an homegrown AI model that we call BillScan, which enables companies to either drag and drop or email forward or many other ways of piping this data in. But if I drag and drop about a year's worth of those electricity bills here, what we'll do in just a couple of seconds is read them, interpret the meaning of those bills, pull out the relevant consumption information, the start date, the end date, do a bunch of things at once then in terms of the emissions calculations. You saw that data completeness bar tick upwards, which I'll come back to. And also start to evaluate those bills for things like rate tariff over charges and a bunch of other fun proactive insights. If I click on one of these, and I'll pause for questions in just a sec. If I click on one of these rows, then a really important principle throughout the platform is that every single calculation will always have the full transparency of, hey, where did this information come from a document provenance or integration provenance perspective, all the great audit sort of event level history that our audit team friends need to be able to trace back and redo the math here. The financial layer, which again will be relevant more for the decarbonization energy management world. And of course, the emission factor, the constituent gas breakdown of that factor, where did we get that factor? Any interim inflation adjustment, currency conversion, unit conversion we're doing in the background, all the really rich information companies need to be able to trust all these calculations and the auditors to be able to follow them. Lots more to show, but I've been speaking for a while, so maybe I'll pause, see what questions I've generated. If not, we can keep marching. Cool. So I'll jump back to the site page overview just to show again, this site level version of that global data completeness bar I showed earlier has now changed, and it's reflecting the fact that I've uploaded from February 3rd through the end of the year here for electricity. But now, Brooke, I'll finally circle back to answer your question of, well, what if you don't have any bills or integrations or anything at all? And there's a lot of ways of getting kind of pretty slick estimates based on whatever you might have in the platform. So just as an example, when you create these sites, which you can do just in a couple clicks, one thing we'll ask you on an optional basis is, hey, do you know like the rough square footage and a rough sense of, what kind of building this is? If so, that's the kind of information we can leverage to get a really quick, essentially one-click estimate for things like natural gas or electricity. So if I click estimate my usage here, we'll pull in that information, that contextual information from the site that we asked for on an optional basis. And then we'll do some quick algebra based on the closest energy intensity figures. So usually leveraging things like commercial building energy consumption survey from the EIA, do that math for you. And then if I click add data, a couple of things will happen. It'll remove from my list here. If I go to that particular data row, then we'll leave a note of exactly what we did and where we found it, all the great information in a structured manner for our auditor friends to be able to follow it. Lots of other, I mean, estimation itself is a whole topic we could spend a long time talking about, especially when we get to scope 3. But just one example of how we try to make it, shallower on ramps for companies who maybe do just want to check the box in year one and get something quick. Cool. One other thing I'll show here on the site page that will be more of a breadcrumb we'll come back to is, as I mentioned, promised earlier in the call, we really try to embed that much more proactive stance of how does this same data you're leveraging for measurement and reporting, what does that have to do with reduction sizing? And so even during the measurement part of the platform itself, before we get down to any of the more advanced pages and reduction pages, we're already starting to flag things that could be interesting for you. So for instance, if you're in a region of the grid where something like a demand response program or voluntary curtailment could be an option, and you've uploaded, a certain amount of electricity, I think it's like 100,000 kilowatt hours a month for this to start to become interesting financially, we'll start to do that math on the fly for you to say like, hey, here's a rough range of what you might be able to save. Like, are you interested? If so, that's great. Like you should connect with our partner in the area, which I think in Ohio is Voltus, and we'll get that project rolling for you. And you'd be amazed, or maybe not, like the extent to which even those little hooks and like gamified, ways of embedding into the measurement and reporting part of the year, which historically was often walled off from the like strategic reprieves that they could think about the future before the next measurement cycle, like even starting to just thread those or sort of braid those threads together has meaningfully ticked up the number of projects we've been able to get done with customers, again, before even getting to the target setting reduction part of the platform. So maybe a question. So a couple of the things I wanted to show were a little bit more on the audit, on reporting, and then reduction. We could show a little bit of scope 3, but I'm conscious I want to be sort of sensitive to what this audience cares about. And would it be interesting to show a little bit of scope 3, or would that maybe not scratch the itch for this call? I'll maybe skip it for now. And if you're interested, we can come back to it.
What was the scope 3 question? Can you just say
Yeah,
that
would it
again?
be interesting to talk about it, or would it be more helpful to jump on to some other
No, I
pieces?
mean it would be like, I think so for example, one thing we think about is our travel, right? Our work travel, which is largely scope 3, so hotels
Yeah,
and flights and Ubers and things. So
yeah,
I think it would be interesting to hear your thoughts on how to
yeah.
estimate that or calculate that. Given the fact that a lot of law firms aren't like, say the Ford
Okay.
Motor Company, they don't have like supplier data to
Yeah,
build into a scope 3 accounting framework.
yeah, totally. Great. Let me show an example of business travel then, and then use it to generalize from there, and then move on. So in general, scope 3, again, as this audience I'm sure knows, is a whole universe unto itself that, many companies are just getting started and don't want to think about getting really deep in their supply chain. And some of them, the juice isn't always worth the squeeze, frankly, as you kind of alluded to, Brooke, if they've got a lot of professional services, like maybe that's not, if they are a professional services firm, maybe that's not going to be all that material, some of these categories. So we really try to meet companies where they are, on any, at any point of that spectrum. We do have companies who just want a really quick hotspot, which we can do in a couple minutes, and I'll show an example, to all the way at the other end of the spectrum where they're engaging, hundreds or thousands of their suppliers with really sophisticated outreach and sending out some AI agents into the web to look at public disclosures. And there's a lot of fun stuff there that I'll probably leave for a separate, initiative. But yeah, let me just do a quick business travel example, because that'll allow me to talk about a couple other fun forms of automation we've built into the platform to really speed along what historically has been a nightmare, which is a scope 3 inventory. And let me just show you a quick example of a travel export system. So this is frequently something companies will come to us with, is like, hey, we don't know what our emissions are with all of our business travel and going to conferences and clients and that sort of thing. But we have a travel system, or we have, reimbursement rates, or we have like some data that lives in some system. And it always looks different, right? Like all of these systems have different schemas. This particular example has flight records of like, hey, some of these were international, some were domestic. It's got really granular detail, like one of these for every transaction. It's got some dates, but it doesn't really tell us the emissions with these. It doesn't even tell us the distance that employees were traveling. It just tells us like airport codes and legs of the journey and maybe the carrier and maybe some information about the class of service and the weird airport terminology for it. And so we constantly see diverse, messy data that looks like this. And so it was very important for us, and this is a pretty big area of differentiation, not to just build one spreadsheet that company would have to put their data into, or really be strict about the kind of formats, but rather to build a much more flexible kind of data ingestion experience for something like this. So if I download this document, jump back to the platform, and I showed you again from utility bills, from integrations, but now I'll show an example of uploading a spreadsheet here in business travel. So I'll drag and drop that spreadsheet. And for spreadsheets in general, we essentially have a modified and upgraded version of that bill scan model I showed earlier, where we'll do the same interpretation, the same reading of it, but we'll ask customers to confirm that we've read it correctly, sort of a trust but verify experience here, because spreadsheets are so diverse. And maybe there's like 4 columns for dates. We want you to choose the right one. So we'll just ask a couple follow-up questions like, hey, did we pull out the right header row? Yep, looks like the right header row. We'll then transform all that data into what we think it means. And we'll say like, okay, we're looking for an itinerary, it looks like, or a class sequence. The last step here will surface any potential anomalies, like maybe there's a fat fingering in that spreadsheet, maybe there's a start date, after an end date, or, who knows what, mistakes happen all the time. And so in the interest of time, I think I'll just go ahead and import this though. And the emissions calculation will happen all at once. And we've done a couple things essentially. If I click into one of these rows, what we've done is, again, leave a note that what we did was calculate the Haversine distance between those airport codes and the legs of the journey. Looks like this was just leg 1, applied the right factor based on the class of service it was, business class versus economy, et cetera, and then calculated the emissions with that. Also evaluated for potential anomalies and duplications. Looks like I uploaded this morning, and so it is actually a duplicate of some earlier data. But yeah, just that gives maybe one flavor for how we've tried to build some tools to make that particular scope 3 category easier, but whole world into itself we could spend a lot of time on. Cool. Maybe just like 5 or so more minutes here in the platform. I'm going to skip over quite a bit. The analyze page is a great place where companies can kind of slice and dice the data, get a sense for where, what's driving the most emissions, energy intensity figures, the financial implications of all of that are here. I'm going to skip over custom dashboards. I might, maybe just very quickly on report. Many of our companies, like I'm sure many of your clients, are subject to a whole bunch of the alphabet soup of voluntary and quasi-voluntary and regulatory disclosure frameworks. And so we've ingested almost all of those and keep up to date on them so companies can collaborate on their drafting of those frameworks directly in Gravity. So for instance, for 261, lawsuits pending, companies can go ahead and can go ahead and collaborate on drafting their TCFD aligned answers here, which benefits from all the data ingestion features in the measure part of the platform for the carbon inventory, but also has some additional bells and whistles like the ability to just like upload company documents or prior reports and get a quick AI summary draft of of an answer to a question here. Of course, this is never something customers submit, nor should they. Like this is something for them to collaborate on drafting and maybe speed that first draft to completion and then shop it around internally, collaborate with their legal counsel and, internal audit, et cetera, before making something like a public disclosure. Don't have to preach that to this audience, I'm sure. Where we can, we also allow companies to actually submit directly from Gravity to various frameworks. So for instance, CDP, we're API partners of theirs, and companies can submit their own questionnaire directly from Gravity. Again, skipping over quite a bit, reporting is a whole world, but maybe I'll round out by just teasing a bit of the what, so what, what does this actually amount to beyond checking the compliance box? And this is really where this part of the platform gets very exciting, where we'll elevate projects that we've pre-qualified based on the exact data that we've been ingesting in the rest of the platform. So a company's unique data, not just generic levers of, don't forget about LED lighting, but actually here's what's going to be relevant for you, and here's potential emissions implications, but crucially also the cost, cumulative cash flow statements and what's this going to cost to begin with? Where is it going to start netting out? What sorts of project sites might this be relevant for? Indicative proposals or investment grade proposals from our partners where those will become relevant so they can start uploading them. If I jump back to the projects page, I alluded to the notion of a marketplace in this sort of information. You'll notice many of these squares now have notions of trusted partners on them. And that's because we've gone out and secured relationships with OEMs and providers and purveyors of decarbonization solutions and said, hey, look, like, do you want access to a whole bunch of essentially pre-qualified leads? They always say yes, and that's great because then we can negotiate our leverage to get discounts for our customers for these sorts of interventions. So really excited to have executed projects with all these partners and many dozens more. Last thing I'll show is just how does this then amount to a plan, an emissions reduction plan? Let me actually jump to an account where I've got an actual plan in it really quick. Because the question we get all the time is like, okay, great, like we want to analyze these projects, but we've also are thinking about setting targets or like we're kind of scared of an SPT. Like, what would it mean to get there? And we don't want to get too ahead of our ski tips, and we want to play around and experiment with different paths toward scenarios. And so, to take one example here of a plan, you can just add those projects here. We got some now associated with it. And then begin to look at things like, okay, what's going to be the emissions reduction potential over time if we add all those cumulative cash statements for those projects together? What would this amount to in terms of the relative emissions per cost implications in terms of the marginal abatement cost curve? Can always fiddle with different assumptions. And this becomes almost a source of truth and a system of record to unite the sustainability departments in our companies with the operations folks and the finance teams who actually have the keys to get these projects done, because it's rarely the sustainability team alone, if ever. So yeah, I'll probably leave the platform demo. I'm excited for any other broader Q&A. There are a couple case study examples I could walk through, but before I do so, any questions kind of before jumping back to the slides?
Ask really quick, when you pulled up the travel data and then you loaded it into your platform, did you have to go in and customize the spreadsheet at all, or you just took it the way it is and it just
Yeah,
did
we
its
just
work
take it the
for
way
you?
it is. That's really where we shine.
Okay, that's good to know because we have a platform that we currently use, but we have to customize all the different columns to make sure it fits into the platform before
Yeah.
we load it. So that's kind of a time-consuming process that we have to go through every year. So that's good to know.
Yeah, and that's, I mean, you're not alone in that, Scott. Don't worry. But that's a
Okay.
lot of the reason we got in the space is to,
Mhm.
in addition to being annoying and time consuming, there's always that, that manipulation just adds more questions for auditors. And so it's a big part of why we're doing well, I think.
Okay. Oh, great. Thank you.
Mhm. Cool. So maybe I'll round out just with a couple like broader lessons that we've learned trying to unite this more compliance, measurement and reporting paradigm of corporate sustainability, which is the like arguably the predominant one now, with still the aspirations of many of these companies to reduce their emissions or reduce energy costs or both. And really our key to doing that, I mean, we've been leaning much more heavily into this energy management kind of terminology for the work we're doing, which has been getting a massive tailwind as energy costs have been rising so much or becoming volatile at the very least, as demand load has increased so much with, to use another buzzword with the AI boom, and has really increased but what that means is it increases the ROI of these projects, right? It means energy efficiency is just objectively more valuable than it was even a few years ago, and where the full story of leveraging the same data you're already using for measurement and reporting to get some real value at it has been powerful. And one sort of provocative, I don't know, soundbitey way that I've been shopping this around recently is like at the end of the day, there kind of like is no such thing as just sustainability data. Like at the end of the day, this is companies' energy data, financial data, operational data. And the key is to just leverage it really cleverly as upstream as you can to address both the downstream reporting challenges and the actionability challenges. And that's really where we shine at Gravity. Skip ahead some of the more marketing slides here. Oh, Brooke, please.
Yeah, on the actionability side, that's
Yeah.
really great. I think that's a step that you know, we think about measuring our GHG emissions for reporting and for potentially carbon offsetting or buying RECs for on the energy side or whatever. But I don't know that services businesses often think about GHG reductions, right? We kind of do the things we do. And again, to the supply chain point, we don't usually have extensive supply chains. Um, so I think that's kind of interesting to flag. Do you have sort of general thoughts on processes or methods? Of course, people can use less energy in various ways or do things with building heating and cooling sometimes. There's those kinds of things. But do you have other thoughts on how services businesses can tackle scope 3 emissions in particular?
Yeah, I love that question. And you call out rightly that like a lot of the more direct operation, sometimes called operational decarbonization, the scope 1 and 2 decarbonization, energy use, like that's maybe more for your clients kind of thing than for law firms themselves. For you, it is going to be the scope 3 reductions plus like a renewable energy strategy for scope 2. So business travel, the one we already talked about, is a big one with really targeted forms, especially now of high quality credits around things like sustainable aviation fuel. There's a lot of really exciting aggregators of demand there and buyers alliances that are really powerful. The levers are smaller, but that tends to correlate with deeper pockets and willingness to invest in some of those more bleeding edge decarb projects. The last thing I guess I'd say is beyond the credit ways of doing it, I think when it does come to the purchase goods and services and supply chain world, like I'm still willing to bet like the maybe the biggest category for a lot of the folks on the call will still be category one, even if it's not a manufacturing intensive supply chain, just the sheer amount of spend racks up. And there, I think there's still just so much low hanging fruit in these supply chains, and yeah, requires getting more accurate data about them is historically been the sticking point because if you just otherwise you just have to spend less and like that doesn't really help.
Cool. Do you ever help people assist with or are there ways to sort of adjust services organizations processes? So, we just get on airplanes when we want to get on airplanes, for example. Like,
Yeah,
is that something that you're tackling or seeing people tackle as well?
it is, and it's yeah, it can be sensitive, right? Like it's rarely
Yeah,
everybody's
sure.
now economy class, like we have to
Well,
be
people, right.
sensitive.
People like to fly, business class when there's a long flight or an overnight flight, which is understandable. You want to wake up and be ready for court in the morning, but um,
Yeah.
it's a higher
One
emissions. Yeah.
example of getting more specific there is actually just modeling like short-term flights versus trains as like a really exciting lever for that top 10 international law firm I alluded to, of very precisely being able to tell like transaction level by transaction level what implications that would have, model different potential policy scenarios so that before you go to the internal committee and say, hey, here's a proposal for the whole firm and the whole partnership, like here's the math behind where we think it would make a difference and why.
Cool. Interesting. Thanks.
Mm-hmm. So yeah, maybe I'll leave you all with just a couple examples of just, companies succeeding at uniting these through areas. And one I've already talked a little bit about, but some companies who we've been able to identify like pretty meaningful emissions reduction and energy reduction projects in. Wisconsin Aluminum Foundry is a tier one supplier to all the major automotives and a lot of consumer companies, sort of like consumer cooking companies as well. A couple hundred K in their first year with Gravity. Race Winning Brands is a PE platform company with about 30 sites and meaningful electricity reductions. And that just wouldn't have happened if we weren't able to mine at scale the insights from things like granular data of utility bills or integrated utility bills. The other one I talked about already, but the notion of just like a lot of companies get stuck in this sort of merry-go-round if they've got the measurement and reporting cycle and then maybe a breath of air and then maybe it's already time for measurement and reporting the next year, or maybe this is just a hot potato who's been thrown to the CFO or someone else and like they just don't have time to quote unquote be strategic about this work. And so that's where embedding the more proactive insights and executable projects into the measurement and reporting process has really paid dividends. And then last example here is that I think it's an important one, especially as well for the services world, that like we're big believers in like, look, granularity for granularity's sake, like isn't the goal here. And carbon measurement should, in my opinion, in our company's opinion, like is meaningful to the extent it enables insights and action. And that sometimes the juice isn't worth the squeeze for certain scope 3 categories. And sometimes like you just have to be smart about your data strategy and like what should we be measuring, and lest this just become an interminable bean counting exercise. And so for us, like that's really what it comes down to. And just to zero in on maybe TTI as an example, they're a Berkshire Hathaway $8 billion electronics distributor with about 200 global locations and able to get them up to speed on their measurement in a couple of weeks. But more excitingly, just executed a massive solar project with them with about $1 million in annual energy savings, despite having really advanced energy procurement contracts. And that only mattered because electricity mattered to them, right? Like it didn't matter to go deep on some other things. That's all I got for you. Really appreciate the time. More than happy to stick around for any other questions or kind of how you're thinking about this at your firms. Would also be curious around anything on your agenda.
No, that's terrific. Thanks, Jay. And folks should ask Jay questions. He's a really smart guy. So if you have anything else, please ask away. Now's the chance.
I had a quick question. So you showed your like bill scan feature where you can scan invoices and just like automatically populates data into the platform. But one of the challenges that my firm has, we have like 22 officers or whatever it is across the country. A lot of our property management companies are not providing us invoices. So what we do is we provide them a spreadsheet, and as much as possible, we try to get them to fill in the spreadsheet. So the way the spreadsheet works is, they put in the building square footage, they put in the square footage we occupy, they'll put in like, for example, electricity, how many kilowatts, the building used over the past month, and then it takes all those numbers and then gives us our estimates. So if they're not giving us invoices, would your platform allow that spreadsheet to be uploaded somehow and it just calculates all the numbers for us and put them into the system? Because right now what's happening is, it's kind of it's a real manual process where we call them environmental leads. They're having to take the information from the spreadsheet and then, manually type it into the platform that we use for all of our data collection.
Yeah, super helpful. The answer is yes, and so we can just ingest a spreadsheet like that. It'll zoom the data to the right sites. It'll do all the calculations automatically. What we'd actually prefer is using the same tool in Gravity we use for supplier outreach to
Mhm.
actually just send a quick survey directly to that company. They don't have to fill out any spreadsheet. Then that'll just be ingested directly in the platform. You don't have to upload anything that way. Saves a couple
Okay.
steps.
Okay, that's good to know. I'll probably I think we still have like another year or so left on our contract, but obviously we need to make some decisions, before that. But I think Belen, who's part of your group, has reached out to me.
Oh, okay.
So I'll probably, follow up with you or her to get some information down the road.
Yeah, that sounds great. And I mean, one thing we're big on is like there's an ulterior motive behind this, but the real stance is like this should be a competitive market. We offer free
Mhm.
trials. Like we're not trying to just like sales you to death kind of thing. Like
Mhm.
we're very, of course, the ulterior motive is because we think our product will win when it's given the chance, and it tends to. So anyway,
Mhm.
just to say, like, happy to have a consultative conversation before a year's mark or something.
Okay, great. I'll be in touch with you.
Thanks. Curious, what are the biggest things you're hearing from clients around these topics? Like fear, what stage of grief are they on, or is it, a real range?
Yeah, well, I mean, so we don't get, we get asked about our sustainability and our GHG footprint in RFPs and that sort of thing. And that is often where the question gets asked. And frankly, it seems more like a due diligence item than anything
Yeah.
else in those processes. Um, I'm a climate change lawyer, so, I deal with this stuff quite frequently for clients with respect to reporting or corporate LCAs or corporate or product LCAs and transparency and standards alignment and that sort of thing. And people really are focused on it. There's been a fair amount of greenwashing type litigation and other sorts of what I'll call, threats that make people it's like when you're driving down the road, there's a police officer on the side of the road, you're probably going to obey the speed limit. And so people are doing that, right? They're focusing on that more and more. So we're getting more and more work in that area. So
Yeah.
there's definitely a lot more interest in this than there was, say, 5 years ago, and people are not winging it anymore.
Yeah.
At least, my clients aren't because I tell them not to. But I think most larger companies are focused on this, yeah. Because it's
Yeah.
like I think um it was in one of your materials, but we're essentially doing GHG reporting to like financial accounting standards.
Yeah.
This is sort of what the metric is, and that's really hard.
Yeah.
But folks like you can help get people there.
We can help get them there. That's a really rich set of comments, Brooke. I mean, a couple things you unspooled. One is like the trend of just like the consolidation of or the incorporation of a sustainability notion and procurement strategy now. And like a lot of buyers of this kind of software are actually housed in procurement departments. And so far as they're charged with supply chain decarbonization and scope three, which is just like, again, sort of mountains and mountains of complexity. The plurality of our buyers are still, if not majority, are still like sustainability, chief sustainability officers, directors of sustainability, that kind of thing. The other big thing that you alluded to and mentioned is yeah, what is like the accounting paradigm here is really strong. There's a reason a lot of the big audit houses, right, are also now doing greenhouse gas emissions auditing. That takes it down a bit of a rabbit hole. But and that there's often increasingly rolls up to CFOs, right, and sort of the financial accounting teams. The rise of the ESG controller position, like, are all evidence of those things. I think my 2 cents are like, that's great. Like the rigor is fantastic. We need that. There's a coming of age of this work that has been needed and is helpful. However, the but is like sometimes that comes at the expense of the proact like getting shit done with this data
That's
side
right.
of things.
Yeah.
And so that's
Yeah.
really why we wanted to get in the space is like these dots are so unconnected at these companies.
Yeah. And just, for us, like we can't, we're a mid-sized law firm, like we can't get out of our way to like do a comprehensive GHG assessment just because it's complicated, but it's actually not that complicated if you just do it, right? And you can do it in a way that's sort of good enough for the purpose. And that I think
Yeah.
is part of my advice too, is matching the activity to the desired outcome, right? And if
Yeah.
it's an internal audit, you can get it 90% right. If it's a
Yeah.
product greenhouse gas claim that you're going to slap on a label, you want that to be 100% right.
Yeah. Yeah.
Different things.
Totally.
Yeah.
Yeah.
But well, any other thoughts, Jay, or comments for our group?
I don't think so. Yeah, just really appreciative of the time and maybe give a few minutes left to go internalize and digest whatever is happening in carb land with the rest of our week.
Yeah.
I mean, yeah, maybe the last comment is like, can't like we started Gravity, SEC was barely even thinking about this stuff and let alone carb. And so for us, those are nice tailwinds that are mostly orthogonal to the value we provide to companies at the end of the day. And the broader disclosure paradigm for getting companies to care, again, is a blessing and a curse, I think, and has pros and cons. And was just kind of like the, I don't know, most vibrant flower to bloom on the grave of carbon pricing, right? That may come or go. We'll see, but is interesting nonetheless.
Awesome. Well, Jay, thanks a lot for being here today.
Thank you.
We and LSN and our members appreciate it, and I'm sure our paths will cross again.
Talk soon. Take care.